Hello, this is Craig Mitchell, your personal mortgage consultant for life. And this video that you're going to watch today is an excerpt from one of my first-time homebuyer seminars. So if you're a first-time homebuyer, this is information you definitely need to know. And even if you're not a first-time homebuyer, I can almost guarantee that most of the information will be new to you, so you can definitely benefit by watching it. If you do have any questions or comments after watching the video, please email me or call me, and my contact information will be provided at the end of the video. Okay, so today we're going to talk about a big problem that could literally cost you tens of thousands of dollars. You know, in a couple other videos that I've sent you recently, we talked about the bait and switch, which is where the banks quote you a really low interest rate, and then at the end they stick you with a much higher interest rate. And we also spoke about the hidden junk fees, which is where the bank charges you extra closing costs at the end that were not disclosed at the beginning. You know, both of these are very, very common, and obviously they're both horrible practices, but in my opinion, what we're going to talk about today is far worse. But before we cover the problem, first I need to explain to you what locking in an interest rate is. You know, when you find a home that you want to buy, you make an offer on the house, and the seller accepts your offer. As soon as that happens, you are now in escrow, and you have 30 days to get everything done and close escrow. At this point, you have two options on your home loan. You can either lock in an interest rate, or you can let it float. If you lock in an interest rate, you're telling the bank that you want whatever the interest rate is for that particular day. So if interest rates that day are 6%, that's the rate that you get no matter what. Even if interest rates go down during your escrow, you still get stuck at the 6% interest rate. But if interest rates go up during your escrow, then you benefit by keeping that 6% interest rate that you locked in. Now, most people will lock in an interest rate at the very beginning simply because they don't want to take the chance of interest rates going up. But you also have the option of floating your interest rate, where you get whatever interest rate is available at the time your loan closes. So if interest rates are lower at the time your loan closes, you get a lower rate. But if interest rates are higher at the time your loan closes, then you get a higher rate. You know, very few people choose this option. You know, if you're a big gambler, you know, you might want to choose this option, but most people I've found like to play it safe. So when you hear the term locking your loan, that's what it means, is the bank guarantees you a certain interest rate. Well, here's what a lot of unethical loan officers will do. They'll give you a call and say, you know, Mr. Jones, I just want to let you know that I'm going to lock in your interest rate today per your request at 6%, or you know, whatever rates are for that day. So you're happy because you got a great deal and everything seems to be going according to plan. Well, a lot of loan officers, even though they tell you that they're locking in your interest rate, they really don't. They let it float even though that's not what you wanted. So let me explain why they do this and how it can cost you big bucks. Let's say that your loan officer tells you that he or she is going to lock you in for an interest rate of 6%, but instead they let it float without telling you. And let's say at the end of your escrow, the interest rates have come down a little and now they're at 5.75, so about 1/4% less. Well, do you think that your loan officer is going to give you that lower interest rate? Oh no. They're still going to give you that 6% interest rate they told you they were locking you in at the beginning, but because interest rates have come down, by giving you that higher rate they first promised you, the loan officer gets paid a big bonus, which in some cases can be over $1,000. So if your loan officer can do this to just 2 or 3 people per month, they can add an additional $20,000 or $30,000 a year to their income, and unfortunately when you're dealing with big money like that, it can bring out the worst in people, and a lot of the times it does. So here's the bottom line. Half the time your loan officer will get lucky and rates will go down and they'll make some extra money, and you know, you still get the rate that was promised to you at the beginning. So I guess when rates go down, no one really gets hurt and no one's the wiser. However, when they're wrong, which is about half the time, and rates do go up, you get stuck with the higher interest rate. So what happens when rates go up is your loan officer will give you a call and give you some BS excuse at the very end of your escrow as to why your interest rate is higher than you were first promised. Now keep in mind, the loan officers that would do this to you do it to everyone. So they have a whole book of great excuses that are probably going to sound legitimate to you because you're not in the mortgage business and you don't know any better. And if the lie that they tell you is really good, which it usually is, because keep in mind they do this a lot, most people will just accept the higher rate and move on. And the reason that these loan officers don't ever get caught is because they have such good sounding excuses that no one ever complains to the supervisors, so they don't get caught. You're not in the mortgage business, so how are you supposed to know if they're lying or not? However, there is a very simple way to prevent all of this from happening to you. And it's simple, but no one ever does it. When your loan officer tells you that they're going to lock in your interest rate, make sure that you ask them to either fax or email you a copy of your lock confirmation. The lock confirmation is an official document from the bank that guarantees your interest rate. And when you do this, there's no way for the loan officer to gamble with your interest rate. Keep in mind, just a 0.5% increase on your interest rate on a $200,000 loan would mean that you would have to pay back an extra $23,400 in interest on your loan. So as you can see, just a small increase in your interest rate can literally cost you tens of thousands of dollars. So the main point I'm trying to get across is always ask for a lock confirmation from your loan officer as soon as they lock the loan. So anyway, I hope this video was helpful. As always, if you have any questions, just shoot me an email or give me a call, and I'll see you next time.